Welcome to the deep dive. Today, we're really digging into the Mammoth Lakes real estate scene. We're looking specifically at where things stood as of April 2025.
That's right. We've got a market update report here full of data, sales figures, prices, inventory levels, even interest rates.
And our mission, essentially, is to pull out the key insights from this report. We want to give you a really clear picture of what's actually happening on the ground there.
Exactly. Think of it as getting straight to the point. What does all this data mean if you're interested in Mammoth Lakes property? We're decoding it for you.
Okay, let's dive in then. The big picture first. The report says the market's pretty balanced right now, about 4 months of inventory.
Yeah, roughly 4 months. And what's interesting is that this comes after a bit of a supply spike back in January. Things seem to have settled since then.
So balanced means what exactly for buyers and sellers?
Well, it generally means neither side has a huge advantage. It suggests, conditions are pretty fair for negotiation, not a crazy seller's market, not a deep buyer's market either.
Right, kind of a middle ground. Okay, let's break it down further. How about the condo market? What did 2024 look like for condos?
So looking back at last year, 2024, condo sales were actually up slightly compared to 2023. 243 units sold versus 231.
Okay, a small increase. And prices.
Prices softened a bit. The median price landed at $725,000. That's about a 4.5% drop from the $759,000 median in 2023.
Interesting. And how quickly were they selling?
They took a bit longer. Median days on market increased to 72 days, up from 56 the year before, so maybe a sign of buyers taking a little more time.
More condos, slightly lower prices, taking longer to sell. Got it. But then things shifted in the first quarter of this year, 2025.
Yes, Q1 definitely saw a pickup in sales activity. We were averaging about 19 condo sales per month.
And the prices, did they follow that softening trend?
Actually, no. Quite the opposite. The median price jumped pretty significantly to $869,000 in Q1.
Wow, okay. That's a big swing back up. But what about the time it took to sell? Did that speed up too?
No, that trend continued. The days on market actually increased further, averaging around 100 days in Q1.
100 days. So even with higher prices, they're sitting longer. Does the report break that down more, like resales versus new builds?
It does, and this is key. That 100-day average is, well, it's heavily influenced by new construction. Resale condos in Q1, they sold much faster, median 59 days on market.
Okay, 59 days for resales. And their price?
The median for those resales was $732,500.
Right. And the new construction condos?
That's the contrast. New construction took, on average, 364 days to sell. Basically a year.
A full year, and the price point there must be different.
Oh, absolutely. The median price for those new builds was way up at $2,195,000. So you can see how that pulls the overall average days on market way up.
Definitely clears that up. So looking at right now, or at least the start of April 2025, what's the condo inventory situation?
Well, active listings for condos actually increased from March to April 1st. Went from 60 up to 74.
More condos hitting the market. What about pending sales, things under contract?
Those actually decreased, dropped from 31 down to 23 pending sales. And it's worth noting, 6 of those 23 are new construction.
Okay, so inventory up, pending sales down for condos. Let's switch gears to single-family homes. How did 2024 look for them compared to condos?
Single-family homes painted a slightly different picture in 2024. Sales volume actually went down. 58 homes sold compared to 66 in 2023.
Fewer sales. And the median price, did it soften like condo?
Nope, it edged up slightly. Went from $1,280,000 in 2023 to $1,300,000 in 2024.
A small increase then. And days on market for houses.
That followed the condo trend. It increased from 57 days up to 73 days median time on market.
So fewer homes selling, slightly higher prices taking longer. Okay, now how about Q1 of 2025 for single-family homes?
We saw sales averaging about 5.3 per month, so, a steady pace. But the really big story is the median price.
It jumped like the condos.
Big time. It surged to $1,694,000 in Q1.
Whoa, almost $1.7 million median. That's significant. How are buyers reacting? Are they snapping them up?
Doesn't seem like it. Buyer caution seems even stronger here. The median days on market for single-family homes stretched out to 162 days in Q1.
162 days. That's
Yeah.
well over 5 months on average. Suggests buyers are really thinking hard at that price level.
Exactly. Very selective. It points to potential price sensitivity kicking in.
And the current inventory for single-family homes as of April 1st, did it jump like condos?
Surprisingly, no. Active listings for single-family homes held steady from March 1st to April 1st, just 16 listings.
Only 16 active listings. That seems tight.
It is relatively tight.
Okay.
And pending sales are low too. Only 5 currently under contract. 4 of those are resales. 1 is new construction.
Okay, so much tighter inventory on the single-family side compared to condos. Let's zoom out again. If we look at total inventory condos and houses together over the past year, say April 24 to April 25, what were the major movements?
Well, there were definitely some ups and downs. We saw
Mm.
inventory peak around the middle of 2024. Then it kind of steadily declined through the fall season. Then it ticked up again in January, February this year, 2025, but dipped again in February.
And the most recent trend?
The most recent thing between March 1st and April 1st is that divergence we talked about. Condo inventory went up quite a bit, while single-family inventory just stayed flat.
Yeah, that's really interesting. Suggests different dynamics at play for sellers of condos versus houses right now.
Precisely.
The report also gives us a snapshot of interest rates, right? As of late April.
Yep, as of April 23rd, the prevailing rate for a 30-year fixed-conforming loan was sitting at 6.84%.
Okay, under 7%. And for jumbo loans?
Slightly higher at 7.0%. But, it's crucial to remember these are just averages.
Right, your individual rate could be different based on credit, down payment, all that.
Exactly. And even small changes in these rates really impact monthly payments, so it's a big factor for buyers.
No doubt. Okay, looking ahead now, the report has some forecast insights for the rest of 2025. What are the key predictions?
A really big factor shaping the forecast is low turnover. A lot of current homeowners in Mammoth either own outright or have those super low mortgage rates locked in from a few years back.
Ah, the golden handcuffs effect. Makes sense.
Yeah, so there's just less incentive for them to sell, which keeps the supply of listings kind of tight, especially for resales.
So that low turnover must affect the market balance differently depending on the price, right? It's not just one overall balanced market.
Absolutely. This is where it gets really granular and, frankly, more useful.
Hmm.
That overall 4-month supply hides a lot. For single-family homes overall, it's actually closer to 3-month supply.
Which leans more towards a seller's market for houses then.
Correct. But then look at condos. Overall 4 months, balanced. But condos under $1 million, they're moving well. 3-4 month supply, so balanced there too.
Okay.
But condos between $1 million to $2 million, that segment is much slower. We're talking 8+ months of supply. Buyers seem hesitant there.
Over 8 months. Wow. That's definitely a buyer's market territory in that slice. What about high-end condos over $2 million?
Surprisingly strong demand there. Only about 2 months of supply. So the very top end is moving quickly. It's really polarized.
Fascinating. Strong at the bottom and top, slow in the middle for condos. What about single-family homes by price? Same kind of pattern.
Similar segmentation, yeah. Most activity is over the $1 million mark. Homes between $1 million to $1.5 million. Super fast. Only about 1 month of supply. Very strong demand.
1 month. Okay, that's moving.
Then the next tier up, $1.5 million to $2 million, slows down again. About 6 months of inventory there, more balanced, maybe leaning slightly towards buyers.
And above $2 million for single family.
That segment seems pretty healthy. About a 3-month supply, which is a solid pace, maybe slightly favoring sellers.
So really distinct market speeds depending on property type and exact price range. What about those interest rates? Are they expected to stay around 7%?
The forecast suggests relative stability, at least through Q1. Probably bouncing around between, say, 6.5% and 7%.
And later in the year. Any predicted drop?
There's some thought they might ease modestly later in 2025, maybe settling somewhere around 6.3% by year end. But, forecasts can change.
Sure. Always take with a grain of salt. But not expecting a huge drop. The report also mentioned creative financing strategies. What does that mean in practice?
Right. With rates where they are, buyers and sellers are getting, creative. Things like temporary rate buy-downs are more common.
Where you pay points up front for a lower rate for a few years.
Exactly. Or seller concessions. Maybe the seller chips in for closing costs or even helps pay for that rate buy-down. We're also seeing some lenders offer programs where they might cover refinance costs if rates drop later.
Smart ways to make deals work in this environment.
Yeah, they help bridge that affordability gap and can make a property more appealing when buyers are being cautious.
Okay, one last major point from the report. Homeowners insurance in California. What's the situation, especially for a place like Mammoth?
This is becoming a really critical piece of the puzzle, especially in high wildfire risk areas like Mammoth. Insurance is getting harder to find and more expensive.
How so?
Well, carriers are raising premiums, sometimes significantly. They're tightening coverage, being much more selective about what they'll insure, And some have even paused writing new policies altogether in certain areas.
Wow. So what's the advice then?
The absolute key advice is research insurance early. Whether you're buying or just own property there, don't wait until you're under contract. The cost and even the availability of insurance can seriously impact your ability to buy or afford the home.
That sounds crucial. Definitely need to factor that in from the very beginning. Okay, so let's try to wrap this all up. What are the main takeaways from this April 2025 snapshot?
Okay, big picture. Mammoth Lakes market is generally balanced, about 4 months inventory overall, but that hides a lot.
Right. Big variations underneath.
Exactly. Condos saw inventory rise and median prices jump in Q1. Single-family homes saw prices surge even more, but sales pace held steady while days on market got much longer, suggesting buyer pushback.
And the segmentation is key.
Totally. Different price points are behaving very differently. Some segments are hot, others are slow. Interest rates are hovering high sixes, low sevens, maybe a slight ease later this year.
And we're seeing creative financing pop up more.
Yep. And finally, that insurance challenge is real and requires planning way ahead of time.
So it really sounds like whether you're thinking of buying or selling in Mammoth, you need to understand these specific dynamics, not just the headlines.
Absolutely. It's definitely a market where being informed and understanding the nuances pays off.
Definitely. So on that note, here's something for you, our listener, to think about. Given how the condo market is showing strength at the lower end, under $1 million, and the very high end, over $2 million, but has slowed right down in that middle $1–2 million range, what factors, maybe economic or lifestyle changes, could be driving that split? And how might that influence your own strategy if you were active in the Mammoth Lakes market right now?
Good question to ponder.
Something to consider until our next deep dive.